Hey everybody, it's me, Myra, at Down Home Money, a simple approach to financial freedom. I hope you're doing well. It's Tuesday, it's my day, and I'm excited to be with you today. I first want to say thank you. We hit 1,000 subscribers last week in our video. You know, we post a video every Tuesday, and sometimes we do some extra videos, and we hit 1,000 subscribers, and I want to say thank you. I am so grateful for you guys and appreciate you so much. So you just encourage me to do more and more. So today I'm excited to share with you 5 things that I'm buying. So I've been doing a lot of research and trying to figure out, you all know I'm a novice in dividend investing, but I'm learning every day. And I will tell you this, I do a lot of research because that's just my personality type. And I love to read and I love to watch different YouTubers that are doing the stock market and dividend investing. As you know, I built a retirement portfolio in my SEP plan, my simplified employer pension. I built that because I was self-employed. I did hair for 13 years until I reached my financial independence number and was able to quit and sell my hair salon. So my whole thing was I put it in index funds because when you put it in index funds, you can really just leave it and not worry about it. And I feel like that right now, it seems like the stock market, in the last week or 2 weeks, the stock market's been very volatile. And a lot of people have been talking about it. And a lot of people are shifting their portfolios and making some changes. I do know Warren Buffett was one of them. Who sold some of his Apple and bought some different things instead. So, he's changing up some things. He sold his Pfizer. And so anyway, he sold some things and he's reevaluating and reallocating his portfolio. So it got me thinking. And honestly, I bought a lot on the dip. I had sold some real estate properties, and you can check those videos out. And you guys, please subscribe. If you love real estate, money, and life, this is the channel for you. I have different videos on real estate market because that's the business I've been in, and on money because I love the FIRE community, financial independent, retire early. I love that community, and so I think it's wonderful that they are making choices to live their best life instead of having stuff. So anyway, for me, I have been financial independent for a long time now. And so now what I'm trying to do is shift a little bit because I own a lot of rental property and it takes a lot of work. It's not as passive. So this last year we sold 8 units. We've sold 8 units in the last year and taken our profits because like the stock market, the real estate market is way overpriced. And now is when you sell. So this last week and the week before, I've been shifting some of my portfolio and taking some of my profits. And then using that money to buy these next 5 stocks that I'm going to share with you, or MLPs or ETFs that I'm going to share with you because I've done my research and I feel like I can take my money, shift it over here and let it grow and continue to grow based on their history. And so I feel like that I would be smarter in doing that than having higher risk by being in some of the really growth stocks, because a lot of them, when you really look at their PE ratios, they're off the charts and it kind of scares me. So like Warren Buffett, because he's brilliant, why reinvent or recreate when we got the man telling us what to do? So like him, I've been doing that. And these are some of the stocks, again, these are some of the things that I'm shifting to, and I'll share a little bit about each one for you. And if you're new to this channel, or if you don't have a brokerage account and you're wanting to learn about dividend investing, that's what we're teaching. I'm a novice on it, But in the last year, I'm building a dividend portfolio to throw me off. My goal is $5,000 a month. Did the same thing with rental property. And so now I'm doing it with dividend investing. And so every month I share my portfolio and I share what I'm investing in and share, how many shares it took to get this amount of money just to help you out. So if you are a novice, be sure and hit the subscribe button and give us a thumbs up and join, and you can learn and watch. And I'll just be totally transparent. Like I said, I'm learning as I go, so you can learn with me. All right, so let's get started. Okay. The 5 stocks or MLPs or ETFs I'm buying. Number 1, AT&T. Now, a lot of y'all know I have been pretty bullish with AT&T. I believe in AT&T, and I think it's a great company. And I think that, yes, they do have a lot of debt. I totally agree with that, but they're working on getting it paid off. And they're paying a 52-cent dividend, but most importantly, they are a dividend aristocrat. And if you're new to this channel, a dividend aristocrat is a stock that has paid and increased their dividend over at least 25 years or more. AT&T has done that for 37 years. So right now we're waiting to see, because they need to do something in the next few months to increase their dividend to not lose that status. But I don't think they will. I think they will increase it. Even if they increase it a penny, that's an increase. So I'm pretty heavy in AT&T. It's a quarterly payout. And like I said, it's 52 cents a share. And I feel like it's priced right. And you guys, if you're wanting to get in, now's the time. It just took a dip. They had some news come out about what they're doing with DirecTV, and that's been very interesting. But I think it's promising what they're talking about. So check it out. It did fall below $28, and its lowest it hit was in the 26 range. I mean, when all the other stocks were tumbling 20, 30%, it didn't fall that far. So it fell to $26. And just now, it's been teetering in the last few weeks, 28 to 29. So in the 27, you're in a good price point. So look into it. And again, you guys, I'm not advising you to do anything. I'm just giving you information. And you need to do your due diligence and make sure it's right for you. So it's right for me. So that's one thing I'm going to buy some more of. All right. Number 2 is VTSX. So that is a Vanguard index fund. And it's the total stock market index fund. And I'll share with you. Let me find my paper here. So what that means, that I think is really interesting for you, is that means the total stock market. So let's say Berkshire Hathaway does great and Apple does horrible and Tesla keeps dropping. Then you have some leveling out because you're the total stock market and you're not buying just one stock. So any of you that are like me and you're a novice out there, this is a great way and a smart way to invest. Because when you do individual stocks, you have an opportunity. You could lose a lot of money really quick. But in this, you're a little more sheltered. I don't want you to say you're completely sheltered, but when it's over a range of, I think it's 3,000 stocks, over 3,000 stocks. So when you've got that many stocks, you're a little more protected. And I think it's important that you understand that. So let me see here. I've got all the information I want to share with you on it. All right. So first of all, let me say this. In order to buy in, that is a Vanguard index funds. And in order to do that, it's going to cost $3,000. If you don't have the $3,000 to invest in it initially, then there's another stock that's an ETF. It's actually an ETF. And what you can do is you can invest in it. And it is VTI. And it holds the exact same thing that VTSX does. Okay, so that way you know, and you can buy less. You don't have to put in the full $3,000 worth. So with that said, the expense ratio on VTSAX is really cheap. It's 0.04. And since its inception in November of 2000, it has made 7.91%. So that's why you can stick it in there and not watch. And a lot of y'all know I did that in my 20s. And within 20 years, I had over $1 million in the account because I put in money every single month. And because of compounding, so when it would pay me my dividends, I let it ride. And because of compounding, within 20 years, I became a millionaire because of it. So that's why I want to share this with you, because you too can do this. It's about consistent investments. But again, on VTSX, you'll need $3,000 to open the account. But if you don't have it, open you a brokerage account with Vanguard and do VTI. It's going to be invested in the same things, okay? So some of the things, the top 10 stocks that are held in that index fund are Apple, Microsoft, Amazon, Google, Tesla, Johnson & Johnson, Berkshire Hathaway, JP Morgan, Facebook, and Visa. And so they hold about, I think it's like 23.6% of the top 10, and it's 3,640 stocks in that index fund. So I think that is a great place to start, and especially for your IRA or your Roth. VTSAX is my favorite, and I'm not the only one. Lots of people talk about it and use it because they've had results. And so that's why I wanted to share that one with you. Okay, number three. Number three is EPD, Enterprise Products Partners LP. EPD operates a holding company which engages in the production and the trade of natural gas and petrochemicals. It pays about 45 cents a share. It pays quarterly. It is an MLP. And let me explain to you what an MLP is, and I want to get the definition because I think that'd be the easiest way to explain it. So MLP is a master limited partnership, and it pays a little different, okay? A master limited partnerships are a business venture that exists in the form of publicly traded limited partnerships. They combine the tax benefits of private partnerships. Profits are taxed only when investors receive distributions, and I receive them quarterly. So for a stock that is $21.32, that's really reasonable for 45 cents a share. Now, a lot of y'all know I do dividend.com. That's where I do a lot of my research, and they have a neutral on it. And then, there's lots of different, everybody has their opinion, right? You guys watch YouTube, right? And so I will tell you, I love it. It's one of my favorite ones. MLPs and REITs usually have the highest yield, and it's in the energy sector. So I will tell you that. So right now, the energy sector is doing pretty good. My Exxon, I bought on the dip, and it has gone through the roof, and so has Chevron and BP. So anyway, that's another one I want you to check out. Number 4 is ABBV. I love ABBV. I started buying ABBV. ABBV is a pharmaceutical. So ABBV's next ex-dividend date is April 14th. So get in before that and you'll get your dividend. And they're going to pay you $1.30 a share. And ABBV is a 49-year aristocrat. It has increased its dividend 49 years, which is incredible. So it is a great, great one to have, especially if you want to be in the pharmaceutical market there. They do pharmaceutical products for chronic autoimmune drugs, and they just purchased Botox, which women win. Botox is the thing. So, I just watched something today on TV, if you watch Dr. Pimple Popper, and she's using Botox for people who do excessive sweating. So if you have your hands sweat or your armpits, I thought it was fascinating. She takes Botox and shoots it, and it gives people relief from excessive sweating. So anyway, I digress. But I think that was pretty fascinating. I just saw that. I thought, how cool is that? I've got stock in ABBV. And ABBV stock has been a strong one for dividends and just in the market. So what I like about VYM, it's got 410 stocks. It's an ETF. Its net assets of the 10 largest holdings is 23.9%. And here are the holdings. Johnson & Johnson, an aristocrat. JP Morgan Chase, Procter Gamble, Bank of America, Intel, Verizon, Comcast, AT&T, Pfizer, and Walmart. VYM's expense ratio is 0.06. So again, it's a Vanguard fund. You got to go to Vanguard to get it, but the expense ratio is pretty cheap. So check into that. Those are my 5 picks that I'm going to be buying in the next 3 months, along with a couple that Warren Buffett brought to our attention, which is Verizon and Kroger. So Kroger is KR. Kroger's PE ratio is 8.64, and Kroger's symbol is KR. And Kroger's dividend yield is 2.08, so that's not great, but it's better than your money in the bank right now. And that's why he's going back to value stocks. You're watching him. He's getting out of some of the growth stocks and he's going into value stocks. I'm kind of doing the same thing. I'm following his lead because he's the oracle. I mean, we can't argue with Warren Buffett. So thank you guys so much. I appreciate you for watching our videos. If you've got any ideas, please give us some comments. What are you investing in the next 3 months? Are you investing in real estate? Are you investing in dividend stocks? Are you investing in growth stocks? Gold, Bitcoin? What are you investing in? Tell us down below in the comments. And thank you so much for watching our channel. And remember, it is not how much money you make, it's how much money you keep and what you do with it. And are you buying assets that are throwing you off an income? We'll see you next week. See you next Tuesday. Thank you.